Hello, this is Coach Mike with WinningStockCoach.com. Gonna go over my weekly market overview for the upcoming week, the trading week, which starts November 10th, 2014. One thing that we've been able to do fairly successfully is project some targets, even when they seem unobtainable, and be within about a 0.5% on them on the S&P 500. Been doing it pretty successfully for quite a while. So anyway, looking at the SPX, this 2034.26 in relation to my target area of 2025.56, ironically is 0.42%, so less than 0.5% away from the target area. Kind of weird how Friday traded, in my opinion, but it was, in a sense, weird in a good way. Um, I'm going to say personally that I wouldn't be surprised to see a little bit of a pullback to come in the markets in the upcoming week, but I don't think it's something that we'll have a good confirmation of right away. Personally, I think it might be a little bit of consolidation, and it might be something that you can never pick how long you kind of see the consolidation. But this is right at the time of year that we had last year where we got into some real just weird, long, and boring consolidation with a few pops. So really what we need to be looking for is a break down or a break above consolidation once a horizontal consolidation channel is seen. I am going to go back over here to the weekly chart. I do want to say that if I'm wrong on my thought that might be seeing some consolidation, then we're probably going to see the market pop up and the S&P run to about 2100, by the way. So I really think that target is a little bit too far-fetched, but you know what? In a market that runs on absolutely nothing, in a market that runs on crazy valuations, and in a market that runs on manipulated data, what's to say it couldn't happen, right? I hate to sound so somber in that, but it is true that the more we go up, the scarier it gets, and the scarier it gets because that's the farther we could fall. So, kind of playing a little bit cautiously. Once I see some consolidation ranges established and then a breakdown below them, I will be more inclined to trade towards the short side in the upcoming week. But if we don't get that confirmation of entry points for the short trades, well, I've got no problem going long either. This past week I saw a couple charts that I thought were beautiful longs, got in those. Have a couple more that I think could have a shot. But I also saw a couple that looked like beautiful short trades, and I went ahead and got in those as well. Overall for the S&P 500, I don't think we'll really know anything until Monday or Tuesday, maybe even early Wednesday, as far as if we're going to get into a bit of a consolidation channel, if we're going to break out above, or if we're going to fall below. So Monday and Tuesday, preparation time, planning time, starting small to negate risk, and then once we get the full confirmations we're looking for, getting heavy, or getting not heavy, but to the full position sizes. We want to make sure we're trading proper position sizes, but to the full position sizes that will be appropriate for us. Going to go over to the DJI, Dow Jones Industrial Average chart. This one's run really, really big off of big earnings within that 30 stock composite that makes up the DJI. Visa's just been on fire since its earnings beat after a couple disappointing quarters and pretty much being stagnant. It took off, and the DJI followed its largest stock. I think overall there could be some upside, but I think getting there is going to be a little bit slower than what we've seen. That upside's probably going to come, in my belief at least, around 17,875 or so. But I'm not completely convinced it's just going to go straight there. I wouldn't be surprised to see it be a little bit of a pain in the neck, as far as most traders would be concerned, to get into that area. And the most important thing to be looking at, that last go round we hit our target area. That's why I left it up there. Our pullback hit our target area. That's why I left it there. And that subsequent target area is that 17,865, 17,875. So I've got no reason to believe it can't hit it. I just have reason to believe that the road there is not going to be as clean and easy as the past few weeks have been. And most importantly, we want to watch our support level 17,279.74, because plain and simple, even if it could get up there, it might not be worth the risk of where else it could go should it fail our support point. Going to move over now to the Russell 2000, the RUT, which again, last week's target area. We had closed last week's candle just pennies above it, or 2 weeks ago for last week's video, and this past week, very little, almost no movement in it whatsoever, as it's sitting right at that target area. Now, I don't want to say that just because I had a line there on my chart that it's guaranteed that it's going to fall now, but I do want to say there might be a better chance of that happening. But I think that we may just come down more into a double bottom type area around 1050 to 1055. And the reason things really slowed down this past week is we are right at a resistance point. So if there is much more of an up move, I think we're going to be looking around 1208, maybe just shy of that 1205, for a move up on the RUT in the upcoming week should we get the up move. Most importantly to understand, though, is what we need to use as our support point, or if you're long in trades, where you'd probably be better off to maybe not completely exit, but at least reduce your position sizes. And I think that's going to come should you fall below that 1171.49. I know we're not that much above it, but that's what I believe you'll see. This particular candle pattern that could be setting up is potentially one that can be a little bit awkward and difficult to stomach if you hold something too long and it ends up being the negative reaction to the setup that it's currently displaying that potentially could see, which would be an evening star. And in that case, this candle that could be coming this next week could actually be as big of a red candle as this one was a green candle. And that's why I want you to be cautious of your support point, because it'll be important for small caps for you to not necessarily exit completely. I never say just dump out of everything, but you can take in the money puts positions, one contract for every 100 shares of a stock that you own. That will give you a right to sell at the strike price. You could sell or just scale out, get rid of a little bit of your position, take some profits. But there were some small cap earnings recently that weren't that good. Zillow took a big hit on their earnings this past week. That's one of your biggest, highest price small caps, and that can weigh heavily on the index in general. Finally, I'm going to go over here to the NDX, that's the NASDAQ 100. And after last week's break of the prior swing high, we actually kind of got not exactly what I was thinking we'd see, but pretty darn close to it. Last week I had said I don't expect here a lot of movement in the NASDAQ 100 in the upcoming week, because I thought that there were too many issues that could cancel the good things out. And what's the result of things when they're undecided? It's called a doji candle, where you pretty much open and close at the same price, which is what we saw all week long. And the weekly candle ended up as that doji candle. Now, as I tell members of the coaches roster at winningstockcoach.com, A doji candle doesn't mean anything. For somebody to say, oh, if you see a doji candle, it is going to reverse. Well, that's not always true. Let me show you something. Right down here was a doji candle on a down move. It didn't reverse. It actually went down more. Right here, we moved down for a couple weeks. You had a doji candle. It did not go up. It went down a lot more. What that doji candle usually signifies is, to keep it simple, indecision, and hey, watch my next candle. I couldn't decide this week, but wherever I go next week is my decision. And I say next week because that's the next candle on this chart. Watch my next candle. I will tell you where I'm going to go. And that's what we need to look at here with the NASDAQ 100. I think if we have a down week on the NASDAQ 100, even if it's not a big down week, it'll be pointing out to us that we're going to go further. So I want you to be watching the support point, 4,109 cents, the prior swing high from the weekly. We don't want to get below that without taking some profits, buying in the money puts, leveraging in any way you can to protect yourself. And that's also your support point if you start to see an up move. That was the breakout point, the prior swing high. If you start to get the next up move, you're not too far off of the support point to assume that you might have room to go. But when you look at the charts that compose this index, the one that really sticks out to me is Apple. It's 13% of the index, and it's really, really, really overextended right now. And I think it's due for a little bit of a pullback. I wouldn't be surprised to see 102 in the next couple weeks on Apple. So anyway, good luck in the upcoming trading week. Make sure to keep an eye on the indices only as a guide and indicator to relate to the individual stocks that you trade. Always have a plan for your trade. Know not only where you think a stock could go, but also the risk side. And that should be the most important thing of your trade plan, is if it doesn't go as planned, where do I sell? And besides that, God bless you in the upcoming trading week.